What to do, YouTube? It's your boy Go to Trades, and I'm back with a Straw Hat Trading channel, and we are back with another weekly analysis video for the stock market ahead, so that you are prepared for the stock market this week. Okay, listen, guys. This week was a very eventful week. We kind of guesstimated what would happen for the week prior. Well, yeah, the week prior, the week that just happened. So we got this relief rally from our what was it, last month, about our last month close, where we actually had a pretty nasty dip, and we had that dead cat bounce into another relief bounce. That's fine. A lot has been going on within the stock market, and we're just trying to piece together the clues, the jigsaw puzzles and whatnot. There's a lot of clues within the charts, and it's our job as traders to decipher those clues. And that's why we are here today. Anyways, let's get started with the analysis. Okay, so this week we have our stock market heat map, and we're going to try to breeze by this video. We're not going to keep it 30 minutes, 40 minutes. Let's try to make it about 15. We'll see, 20 maybe. But anyways, stock market heat map for the S&P 500 for the weekly chart analysis. As we can see, we have technology being pretty much kind of still weak. We had some big blocks from earnings like Apple, QCOM, and it looks pretty decent. Technology looks pretty decent. Nvidia had a little bit of recovery from that nasty dip from last month. Finances is still looking pretty weak. Obviously, we're starting to get some type of relief in that sector. Retail, we're starting to get a little bit of relief. Same thing with Amazon. They had that little dip for earnings, and it got bought right back up. Tesla, of course, got a pretty good reaction off of earnings about 2 weeks ago, and it's kind of maintaining. And health and technology looking pretty decent. But if you notice, we still have defensive also holding up with utilities and producer manufacturing. But it's also very important to notice that energy is pretty weak. Energy has a very big bulk of red, and that's another defensive sector. But as you can see, it's not holding as greatly as other sectors. So it's pretty noticeable that maybe we might be transitioning from a risk off to a risk on. But like I said last week, everything has context. So if I were to switch this to the monthly, we are still risk off on the monthly, okay? So everything does have context. We're still kind of teetering. You got AMD minus 15% down from on the monthly chart. You have Intel 25%. Things are still teetering. Even the video basically flat from last month. So there's not really a lot to say in terms of are we done going down or not? Okay. Anyways, let's get into the major economic reports and what's coming for this week. Now, it's a pretty light week, to say the least. I think the only thing that's might move the market a little bit might be initial jobless claims on Thursday, and you also have consumer sentiment. Now, for the most part, there's not a lot to go over. There are some speakers, but it's nothing too hefty in terms of what's to come for the economic calendar. Next, we do have our earnings. Earnings is coming up this week. We have Spirit Airlines, Palantir. I know a lot of people like trading Palantir. Not my cup of tea. I have no idea what's going to happen here. But I just kind of want to see how these earnings happen. Same thing with Lucid, mainly because Tesla performed well for earnings, even though they didn't perform well on their earnings report. So let's see. Maybe Lucid might be maybe might have the same reaction. Microchip, I don't know what company this is, but I think we should pay attention to it just because it has chip in its name. I know that's very counterintuitive to what companies are supposed to be doing, which is printing money. But the name right now, it's might be something to look at. Datadog, data is one of the gold mines right now. It's kind of the oil rush of the technology revolution that we're in. So Datadog is very important. I know back in the bull run within COVID, Datadog was going crazy maybe we might get something, some good news on this earnings report. Celsius, this is Wall Street's darling right now in terms of energy drinks and stuff. So Celsius is another pretty big name to watch. We want to see how Disney also is performing. Ferrari as well. There are some really good names here. Like I was saying, like I thought that it wouldn't be that interesting of a week, but no, this is pretty interesting. I'm not gonna lie. You also have Rivian again, Tesla, Lucid. This is pretty. This might be a pretty nice. This might be a pretty nice week ahead. Oxy. We have to see how oil's doing. You also have Uber. Uber might be catching a bid. Affirm. We'll have to see how that'll be doing as well. ARM, another chip name. There's a lot of good names here. I'm not gonna lie. Robinhood, Beyond Meat, Trade Desk. Now, now to end the week, I'm not really paying attention to these names at all. I'm not really a fan. The only thing I would probably look at is Unity. But for the most part, I think that this is a pretty decent week for small and mid cap names. But what I'd be looking for, I wouldn't play earnings for any of these names. But what I'd be looking at, for the most part, that has my radar would be ARM, Robinhood, and maybe Oxy and Datadog. Those what I'll be really looking at. And I guess runner up would probably be Celsius and Disney. Everything else I wouldn't really care too much about, but these wouldn't really move the market as much. I think ARM might have kind of a tailwind effect with the AMDs and those type of earnings, Qualcomm. So it's kind of a toss up. I couldn't even give you guys my prediction to see what will happen or whatever. But that's what I'm looking at. Now let's get into our macro analysis, our macroeconomic analysis using the dollar and yields. So, guys, we were in a bull flag consolidation, and I kind of showed you guys that last week. So I thought we would have got some type of breakout and maybe retest our October highs up here at this October 107.3. However, we end up breaking down, which I mean, at the end of the day, I mean, sometimes it works out. Patterns sometimes work out, and sometimes they don't. So we end up breaking down, and it's pretty important to note that even though we've broken down, this is not a victory lap for the Bulls. Mainly because we broke down, and we are now sitting on our major support line here. This is a major support line that I've actually been highlighting for a while. So this major support acts as support when it was our resistance. Now, it was our resistance in February. It was our resistance in April. Now this is acting as support. So this is kind of something to really be paying attention to. So if we get some type of action where we make this our, hold on one second, we make this our support, right? And we might bounce, hit our resistance, some type of double bottom or retest, break retest and another breakout. Then this can be some type of trampoline effect to actually break us back up to maybe retest this 106.5 area. And again, if we break this 106.5 and we try to retest this 107.3, this is going to be our line in the sand for maybe a nasty bottom. Okay, so this is what I'll be really watching for to see what happens, especially for this week ahead. So I think that's what you guys should be putting down on your chart. Sorry for the stutter. But yeah, so anywhere between, what is this? This is your 104.7 to 104.3. This is your area of major support. If you can hold this support, I'm telling you, retesting your highs will not be a hard task. I am telling you. Same thing with the yields. It's basically doing the same thing. You end up breaking down, but you're breaking down into major support. Now, you haven't quite gotten there yet, and you can see we've been respecting this support line since the year started. So if we come down and retest the support area to, we'll say it ranges from 4.43% all the way down to 4.37%. If we make some type of bounce here, then it's another trampoline effect. I think we'll be able to retest our highs and not just retest, but maybe even break it. And if we end up breaking our highs of, what is this, 4.7%, if we break that 4.7, not only do we mount, don't not only would we mount our monthly support area, which we're in this yellow channel here. If we mount this yellow channel, then we have room all the way up here to 5%. Now, a room to 5% will basically create some type of cup and handle. This is my favorite type of pattern. A cup and handle is a very bullish pattern. And if we actually do create a monthly cup and handle, this would be like deadly for the market, right? A monthly cup and handle. We can go all the way up to 5.5%, 5.4%, and this would be a nasty move. You can see this happened before. Like, this actually has happened before. And if you go back and check your August 2023, right? Your August 2023, and you start getting some turbulence around this top October 2023. Yeah, it was pretty shaky. Like this like area was a very shaky few months, right? This is when like the market was dipping like bad, like we were having a correction. So if we get some type of action like that again, I do believe a massive correction will come. So that's just very important. So make sure you put that on your charts. Next, let's go to our indexes, right? Indexes. It's basically the same thing that I'm going to go over from last week's video. Our indexes look pretty decent in terms of this relief rally that we got from all the way from the last couple weeks. So we got this relief rally in this buy zone I told you guys from how long that this would be our buy zone. And now that we got our buy zone, we got our initial buyers. Is this gonna jumpstart our rally? Maybe, maybe not. I'm gearing towards no, because this is our sell zone. This zone is what we will be looking for a higher low. You can ignore this candle, but this zone is where we'll be looking for a higher low. I mean, a lower high. So if we print a lower high on the weekly, then we should make some type of action like this. So if we cannot get over our about 18.7, if we can't get over, and this is like our NVIDIA demand supply zone. So this is when NVIDIA had actually saved the market back in March. If we cannot get over this zone here, then we will easily make our way right back down to retest this buy zone here. Now, if we retest this buy zone and we find buyers, then we could just, try to make our way back up, or we could print a new low down here in our next buy zone, which is 16.8. So that's what I'm looking for this week. So again, if you clear, you have to clear like maybe 18.15 towards like maybe even clear 8. Like you have to probably clear 18.2. I'm really looking at this like where we broke down at. You see where we broke down? Our open was at about 18.150, 18,150. If we can't clear this area here, like if we just can't clear this wick, then yeah, I do see a lower high being printed. So that's something that we'll have to try to clear. If we can't, then we're bearish. Same thing with ES. It's basically the same setup. Maybe let me actually like extend it. I'm sorry, guys. So yeah, it's basically the same setup. This is what we're watching for. If we can't clear this area where we broke down from, then it's safe to assume that again we're gonna print a lower high. A lower high will bring us down back to this buy zone, and if we can't find buyers in this buy zone, expect a retest expect a lower low down into this area here of 49.29. And again, if you can't hold this, your next buy zone that I have marked out clearly would be 48.70. So I will say this, ES has way more room towards the downside than NQ in my opinion. So yeah, if ES can't hold and the SPY can't hold, I believe the SPY will be your best opportunity for shorts and puts in the long term. So I've actually started positioning in my ES, in my SPY and my QQQ puts. I actually started from up here when I called the when I called the top. And when I called the top, everyone called me crazy. I called the top, and we never made, like, you never made another high ever since I called that top, which is kind of funny, because they say you can't call tops, but I call bullshit on that. Anyways, when I actually took profit was right before this dump right here. I took profit, like major profit, and I kept some runners, and I caught this as well. So obviously I took my profit, and now I told myself on the retest I'm gonna re-engage, and this is my retest. Again, I did the same thing for ES last time, and this is my retest. And my proof is in my pudding. It's all in my Discord. I'll have to go through and show you guys. Probably gonna do that toward the end. I want to make sure I finish this video first. Okay. Next we have our RTY and our Russell. So RTY and Russell it's the same thing, same setup, guys, same setup, except there's a clear head and shoulders forming here. You have left shoulder, head, right shoulder. What I'm looking for right now is some type of right shoulder rejection. So between 2090 to 2100, looking for some type of sellers to come through and smack you right back down. If you can get smacked down and hold like this zone here though, then I'd probably be a buyer on the RTY, because on the monthly you still look pretty decent on the monthly. Like if I show you on the monthly, you're really holding this uptrend, and you're kind of making an ascending triangle here. So let me go ahead and clear all this extra shit so you can see it. Excuse my language, my bad, guys. So yeah, let me clear it. Okay, look. So you have your series of higher lows, and then you have your rejections here, right? So boom, you reject, higher low, reject, higher low, reject, higher low, until you actually break out. That is an ascending triangle. So that's what I'm looking for potentially to happen. But again, if you make this potential head and shoulder, if this potential head and shoulder forms out, then instead of a ascending triangle, you're actually going to get some type of rejection down into this falling wedge. This falling wedge support line here, because this would now act as support. It was resistance, but it should act as support. So if you get some type of support to this head and shoulders, then I can be a buyer here potentially, and that's only if you could hold 1830. I could potentially, keyword potentially, be a buyer right here. If not, if the market continues going lower, then we'll be trying to target this 1680. Okay, so that's what I'm watching for RTY. For the Dow, one second. For the Dow, again, we broken out of this rising wedge here, and we started making our way towards the downside, and right now we are bear flagging. And it's safe. It's also safe to say that we are also bear flagging on all of these names on the NQ, on the ES, and as well as on the I wouldn't really say on the RTY, but really on the ES and NQ, you are setting up some type of bull flag. So let me kind of show you this. I mean, bear flag consolidation. Let me show you. I'm trying to clear up all this mess. I'm sorry, guys. I got to get quicker on like the hotkeys. I know my hotkey game is garbage. I know, guys. Actually, hold on. I have another tab for it. If I can find it. Is this it? Okay, this is kind of it. This is for my Discord members. I show them my proprietary system that I kind of use to demonstrate some stuff. But anyways, this is a bear flag on the ES, and I'll show you here. Again, bear flag is just your flagging, where you're making a series of lower highs and higher lows and higher highs, but within a flag. So it ends up ultimately breaking down to the downside. Usually it's supported by a drop off in volume, and you could kind of see it, right? As we were going down, our volume was going up, and on our flag consolidation, volume is going down as we go up. Okay, that is like your textbook bear flag. This is textbook, okay? So I do think that this is still a bear flag. A lot of people, I've been kind of peeping other YouTubers. A lot of sentiment is changing towards the bullish side, and I get where they're coming from, but yeah, this is still bullish. I mean, this is still bearish in my opinion. Maybe I might be wrong, but for the most part, this is just what I see. So that pattern is the same pattern on NQ. It's just a bear flag. So again, even on the Dow, you're just sitting in a bear flag, and we're already at 20 minutes, and I suck. I'm sorry, guys. So yeah, you're already sitting at this bear flag. So what I'm watching for, it just if you can't break out of this bear flag, and that just means breaking this 39 to 80. If you can't break above this area, I do believe that you're just gonna ultimately break back down to the downside. So that's what I'm looking for on the Dow Jones. Now moving over to tech, same thing. Tech is operating in bear flags across the board. There's I'm not gonna really get too deep into it. You want to try to clear. You really want to try to clear your 3120 on big tech. You want to clear, what is this? You want to clear 206 on XOK, and you want to clear 439 on QQQ. If you can't clear these levels, then obviously your action is something like this that you can see printed here on QQQ. So that is what I'm watching. I already started some positioning on, like, when we got to 436 at our top here. I started some more positioning on my puts, my long dated puts on QQQ. If we continue going up to this 438, 439, I'm just gonna add more, and I'm just gonna continue adding more until we actually break out. If we don't break out to 441, then I'm like, why am I scared? They're long dated. So I do believe that our target, and I kind of went over it in the last video, so I won't go too in depth on it. You guys could go and look for it. But I do believe if we actually break down for real, then we have a large base of target. We have like maybe to 360, 395, even between there you have about 380. There's a lot of room to the downside, guys. A lot of room. Now I'm not saying that we're gonna full out crash, but this is just opportunity toward more upside. You know what I'm saying? This is just where buyers sit, like long buyers. So that's just where I'm banking my support. Okay, so last but not least, we have chips. Chips is very defined. You can see it here. On chips, like I said last week, chips lead the market. Chips lead tech, and tech leads the S&P. So that means that chips are going to lead. They're going to show you the action first, guys. So for chips, you already came all the way up to this area of confluence, right? This 220. This 220 area is what you want to watch for. If you cannot break above 220 on SMH or on the SOX here, what is this, like 220, 222? If you cannot break above, I'm telling you, you have a lot of room to the downside. This is a classic higher, low, higher, low, higher. I mean, lower high, lower high, lower high. You keep on making these lower highs. Now, if you make another lower high here, guys, you have so much room to the downside. So much room. Now, this just makes a juicy setup for names like SMCI, like Nvidia. So much room we have to the downside. Now, obviously, I'm not saying that this is something where, okay, we're gonna like dump and not recover. No, like we still have a lot of room toward the upside on a monthly basis, but we're just trying to find new support. So I think new support will lie somewhere between 188 to 180. So if we get some type of support here, this is what I want to go long. This is where I really want to go long, where everyone is bearish on this market. I would want to go long, just like in October here. This is my area of actually buying and trying to go long in this market. Okay? That's the name of the game. I think a lot of people kind of misconstrue the name of the game. You don't buy high and sell low. You do the opposite. You buy low and you sell high. So I think that's where a lot of people, kind of mess up. And I'm kind of flipping through screens right now so I can show you guys something, right? This is what you call the wall of worry, right? This is a trading psychology chart. Let me go ahead and zoom it in for you guys. Okay, so check me out, right? This is your wall of worry. This is your cheat sheet for the market, right? Where we are at, in my opinion, we have dipped from this euphoria all the way down to our complacency, right? Where we are creating some type of bear flag. Let's go ahead and let me go ahead and show you guys word for word, bar for bar. Excuse my dog in the background. Okay, right here. Let's use ES for an example. I like using here, not this one. I like using NQ, but we use ES. A lot of people like SPY more than the Qs, but whatever. Boom, right? So here we go. Let's do it on a weekly, right? This is your wall of worry, right? So we end up climbing your wall of worry, you end up rallying, and then you become very optimistic until you get very euphoric, right? And this is your euphoric action here. Once we actually start dipping, and that dip turns to a sell, and we got these 3 major down days, down weeks here, right? This is where we have this, this is just a cool off until the next rally. This is like the bear flag consolidation. You see it here. You have 1 dip, 2 dip, 3 dips. 1 dip, 2 dip, 3 dip. Boom, right? We bottom. We climb this we climb this wall of worry into this bear flag. You see it? Into this bear flag. And then once our bear flag breaks, we go all the way down to where we started. Where did we start this? Right? You could say we started down here. Obviously, we kind of did, but this is major support. So I'm not, we'll say starting it from like this sell point here. So you have your capitulation and anger, and then maybe you get one more last sell into your depression. Now you're just like, man, you know what I'm saying? I should have just took profit up here. This is crazy. Where's my money? Where'd it go? Until we find buyers, because obviously this is major support here. We get this major support rally, and now you just can't believe that, wow, this rally is a sucker's rally. We're not going back up. Until we end up repeating this cycle where we start climbing the wall of worry. And then it just repeats. That's all it does. It's just going to repeat and do the same thing over and over again. That is the market. Now, if you go back to all of our major rallies, they do the same thing, guys. They do the same thing, right? Climb to euphorism, or whatever the word is. I'm a math major, not an English major. And then we bear flag, right? We bear flag. This is our bear flag right here. We bear flag into a deeper pullback. Now it's the end of the world. It's the end of the world. And then we get our suckers rally, which is actually real. And we climb right back up, the wall of worry. So I say all that to say this, right? I say all that to say this. Some people may not see it, and you won't see it until it already happens. And at that point, obviously, it's 2020 when your vision is 2020 when you look at it from a retrospective view. You get what I'm saying? But the point of this channel is to kind of open your eyes to like different possibilities. I don't just cover the bearish side. I'm not just a bearish guru. I'm not just a bullish guru. I just tell what I see from the charts. Now, from what I see from the charts, this is something that is probably prone to happen. Just like when I called it in March. Okay? So that's just what I'm looking for, and this is what I think may happen for the market ahead. So let me know what you guys think down below in the comments. This has been a 30-minute video. That's not bad, but I want to do 20, 15. Sorry. Anyways, it's been your boy Go to Trades, and with that being said, that is it. Make sure you have a green week and a very good rest of your day and week. Anyways, I'm gone. Peace.